How we doing, everybody? Welcome, welcome. Wendy's. It's always by the dip, huh? Market couldn't decide. Uh, RBLX. Honestly, man, I just don't trade these things. Shit. I mean, if you're gonna take a stab, here's the place. Wedged in there, eh? Well, guess I'm gonna have to take back what I said about that and say that thing is absolutely ready to make a move. Up or down, who knows? Looks pretty terrible. But these bad stocks been getting a lot of play lately, so if it breaks that trend, try to take it down to this previous low down here, obviously trim off some there. Or if we're gonna bounce this trend and break out of here, look for some of this upside. Gotta believe that 42 would be real hard to get over. But nice to have it pinned right at that 40. So if we get the bounce over it, you can play 40 calls and get that nice high delta on them. Or break down and you can play 40 puts and get that nice high delta on them. Welcome everybody. How we doing? Hope we all had a good day. AMD did it for sure. It was wild. This one's that we're actually going to talk about this one earlier today because, of course, when everything's just going mind blowing runs, everybody wants to chase them. And man, this one actually gave a pretty disgustingly good entry, in my opinion. And so we're actually going to talk about AMD because, don't get me wrong, it's a big range, but this thing been stuck in a range for a month. So it's a real nice one to talk going for the range trading lecture. And then, show that other side of ranges of without range, there is no breakout. Rena, how we doing? We'll just give it a few more minutes. I'm hoping we're gonna get a good turnout tonight. Probably not, but we'll see what happens. I just get, we've had a lot of range trading in the market lately. And so people have been getting smoked. We've all seen it that, of course, don't get me wrong, flips and the VC folks tend to stay printing, but people have been having a lot of trouble. They got used to just these big, huge momentum moves, and a bunch of them are not having that follow through lately. So they've been getting pretty smoked trying to hunt the breakouts when most things have just not been sustaining breakouts or breakdowns, which is tells you the market's doing a bit of ranging. We're seeing a bit of expansion into other sectors outside of big tech, which has been giving people a lot of trouble. What's up, Ricky? How you doing? Scotty, welcome back. Welcome, everybody. Just gonna make a quick post. Hope everybody had a good day. A good day for me. Honestly, kind of boring day. I ended up calling it early. I don't know. I let's see. We can look at my day. I can tell you how my day went. Well, trading SPY. I had a couple other things. I swung some AT&Ts. Those hit pretty nice. Some of these on here. So hit some puts up here, hit some puts right here, hit some puts right here at the opening range that I ultimately got stopped out of on those. Maybe even hit them somewhere down here, a little bit. I think I hit them off this 9. And then once we had a few of these candles closing, I started to get worried and took the stop out on those. Um, took a bounce. Oh yeah, took calls somewhere right around here as we were finally starting to poke our head and see a little bit over here. I think about on this candle, I finally took a couple of calls and was able to get a nice, a little scalp up, but nothing too exciting. And then that was my last trade of the day. I exited on this candle. And then came back and looked at the market about here. I was like, well, I'm not gonna buy calls because we're at the top of the opening range. Then they exploded and quickly got smashed. So I was happy that I didn't take anything. But nice little, some definite nice scalps at the end of the day there if you were trading those last few candles just for some funsies, nice things to have. But 3 good trades, one good trade. One of the shorts was really nice. That one paid really good. That one was in voice chat. I know some people were in there with me and hit those with me. But then one stop out, not too shabby. Never complain about that. Been having a lot of no stop out days lately, so I had a feeling a day was gonna, I was gonna get one eventually. Okay, well, welcome everybody. Hope everybody had a really great day today. Uh, Was it pretty what time did I get on voice chat? I don't know. It's nothing official or anything. I just try to get in there when Flips gets off. I know Empanada's been running the other VC lately. But I've just been sharing my screen. I don't know. There's only been like 20 or so people joining. But I've basically just been waiting for Flips to get off. And just giving some people another option to look at while I'm sitting there looking at trading. It's pretty easy to click a button and share my screen. So that's really all I'm doing. I've been saying some trades. People have been taking trades with me, but nothing official, nothing like that. Okay, well, welcome everybody. Happy to have you here, Dirty River. Thanks for taking time out of your night to be here. We are talking what's up, Sonny? How we doing? We're talking trading range trading today. It's something that I love because, as a scalper that is typically just not looking for breakout moves, I'm just looking for, quick get in, get out, get your 20%, your 10 or 15 minutes or 5 minutes or whatever and be good to go. And that's what range trading is very, very good for. It's, while ranges are, you know, it's interesting to think because, typically when you're range bound, people are complaining because you're range bound, but typically within a range, you are seeing good volatility, which as, options traders or, day traders, that's what we're looking for. We're looking for volatility. There's of course times of the day like this where nothing's going on. People are trying to buy every candle or sell every candle, and they're all just losing money until eventually one of them ends up being right. But after an hour of stressing out, but generally in a range, you're going to see, pushes up with big reversals followed by big bounces. You might get some candles like this, which are obviously, obviously hard to trade. But it's plenty of volatility, and these aren't going to be big moves or anything like that, but they're going to, a 50-cent candle, 40-cent candle on SPY pays really, really well in a hurry if you are quick with it, and so it's important to know how to range or trade ranges And the main reason is the market ranges more than it trends. This isn't, not just feelings or anything like that. That's just a simple statistic. I mean, the market spends more time in something of a range than it spends in any sort of trend. We're gonna, today's pretty much just going to be, technical like charting day. We're just going to go through many charts, identify ranges, and discuss what we see on them, discuss how we might think about how to trade them. People hear me say it all the time. Trading ranges is it's easy. It's everything is really cut and dry for you. And so that's why I like trading them. You have very defined price targets, you have very defined stop outs, very defined entries. And if you're trading ranges correctly, they give you an extremely low risk but high reward trade. So I wish people like to trade them more. Most people hate it, because you don't see those big breakout moves. You don't see the moves like AMD or whatever made today, any of those ones that make those big moves. But what people forget about ranges is that without a range, you will not have a breakout. That's the market, building liquidity for a move, whichever way it wants to go, up or down, doesn't matter. Maybe people are building in long, maybe people are building in short, but they're doing it over, an extended period of time. A range can be as short as 3 days, or it can be as long as, a month, 2 months. IWM is a prime example. We can look, just to start looking at some charts. This IWM chart, if you zoom out, it's been in this range for years now. I mean, 2 years now. It has been trading in this exact same range. And we finally, well, we'll see how tomorrow goes, but we might finally be getting our first weekly close, weekly candle close outside of this range for the first time since June of 2022. Or sorry, oh no, sorry, April of 2022 was our last time spent outside of this range. So long time ago, so really something to have your eyes on for small caps or whatever. And this is one of those really prime examples of, we can look at this big range to think about trades. And this is weekly time frame, so it's not something that you're necessarily going to like really get hung up on your shorter time frames, but we're just going to kind of get into this. And like I said, we're just going to try to look at charts today, and try to identify ranges, identify how we want to trade them, ways that we don't want to trade them, and hopefully it should help quite a bit. I'll try to go slow. As always, if you have any questions, post them in the chat. I will likely miss them as you post them, but hopefully I'll see it. And if I don't, then we'll wrap back around to them at the end of the end of the class. So we're going to start with, how do you identify a range? And how I personally like to identify a range is I like to see, and this is, I've kind of talked about this, just a little side note real quick. I'm kind of trying to do all of my lectures right now in a row. So we're going to be able to post them all. And it's going to be kind of like a start to finish of things that I look for during trading, things that I do every day, things that I care about. And so then if people ever want, they can kind of go through all those videos and see where my mind is. And so what I look for when I want to identify any sort of a range is, first, I want to identify some trends, because when the market is trending, we know that it is not ranging. And so, the market only does two things. It trends and it ranges. There's only two options for the market for what it's going to do. So we want to identify some trends, and we need to say that we have a trending market. So we had a trending market going on in IWM going into that, early 2022. And, a downtrending market. And we were setting lows, we were setting what we need to have a trend. We were setting lower lows. So now we've set lower lows. Well, we've broken the trend and set a higher high here. And this is, technically speaking, this was a higher high, 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 but we have set a low. And then now, once this red candle has formed, in my uh in my opinion, this range has now been established. And don't get me wrong, there's no denying that we were talking that this is a range from 162 to basically 202, something like that. So this is a very large range, 25% range, quick math in my head. But that's how we identify the bottom of the range, and that's how we identify the top of the range. So now, and that's it. I mean, that's how you identify any range. As I said, there can be short ones. There can be 2 candle long ones. There can be 2 year long ones. I see Scotty's question about the opening range that I trade, the 18 candle opening range. That is a range. And all ranges are traded the same. So whether you're trading Al Brooks opening range that I teach based on those first 18 5-minute candles of the day, or you're way out here on the weekly chart, opposite end of the world, looking at these, at the IWM chart in a 2 year long range. It doesn't matter what time frame you're looking at, nothing like that. You trade a range the exact same way. And so how do we do that? Because people hear me talk about it all the time, saying it's super simple, it's super easy, and yet people tend to lose the most money trying to trade things like this. And the reason is, unfortunately, greed as traders. When we've been getting spoiled with like breakouts that hold or breakdowns that hold, things that, like multiple day momentum moves, things like that, we really start to think that that is going to come every single day. But it doesn't. In fact, more times than not, it doesn't. Like I said, the market ranges more than it trends. So we always want to assume that a range is going to hold. And we aren't going to break down out of it. We aren't going to do any, we're going to stay within that area. So how does this benefit us as traders? And as most of you know, with how I trade, these are the things that I trade every single day. So we're also going to kind of get a little bit of support and resistance involved in here. So obviously, when we have a range, the easiest way to think about it, the top is resistance. The bottom is support. And so, support and resistance has very, very defined rules. There's times and there's places that you don't follow these rules, of course, but when we are at support, you buy calls. When we are at resistance, you buy puts. So that's what, when like me or Flips or other people, you say you want to buy calls at the bottom, you want to buy puts at the top. When we're saying that, that's because the market is in a range, or what we are trading is in a range. And the top and bottom of that range, all they are is support and resistance levels. So the next thing that we want to look for is the no trade area of a range, at least in my opinion, at least for how I like to trade ranges. There's a place you don't want to be trading. And where that is the middle of the range. Because at the middle of the range, all bets are off. When we're here, you can see maybe we break up, maybe we break down, maybe we break down big, maybe we break down but up over it. It's just not a good place to be in the market when you're in the middle area of these ranges. Is there, trades to be had? Can you try to short, or short the breaks below, longs the breaks above and retest? You can, but your risk is very high on those because it becomes hard to define a stop loss. Because if you're trying to play this break in the middle here, then realistically, your stop loss is going to need to be, $3, $4, $5 below you to have a reasonable stop loss to find your next areas of consolidation or support or whatever it is. So if you're trying to get long up here, you accrue large losses to the downside. If you're trying to get short up here and it breaks out, your stop needs to be these areas up here. So if you're trying to get short here and we break out, your stop is $6 or $7 above you, and your profit target is maybe $5 below you. So your risk reward ratio will never work. You will not last trying to take trades like that. So as traders, we want to buy puts at resistance, buy calls at support, and in a range, that's just the top and the bottom of the range. So we want to be looking to enter short as we approach the tops of these ranges. We've been set back here. So if we want to be short, you want to be up here. You know, you want to be short at 199 or 200, obviously big whole round number. Don't, you know, you typically don't want to long things there. You want to be short up here knowing your stop's a buck above you, you know, you're like, that's it. You're only risking a buck of upside against you. And, you know, obviously on a range of this size, first target should likely just be the middle of the range. No big deal, you know? So at least with this trade, and if you're trading with, you know, a month of time, really trying to catch the entire move, you're risking $1 of upside for a potential of $17 of downside. Same as down here. You want to get calls at the bottom, especially this one. This was a nice double bottom on the weekly chart. You know, you want to be buying calls down here towards the lows, 162, 163 area, and knowing your stop is if we close, you know, if we get a buck close or a buck 50 close outside of the bottom of that trend or that range, stop out. And then again, you know your risk, $1 or two, just to get back to the center of the range. You're looking at $20 of upside to make it all the way back to the top of the range, $40 of upside on $2 risk. Obviously, you don't want to hold contracts for months and go through all of this, but just as a long time frame example. So this works on all stocks. As we said, all time frames, all of that. IWM is just a great one because we were actually seeing, you know, some of our other market statistics of, you know, our first test, our second test, our third test, our fourth test. We know that 80% of breakouts fail. However, this is now, what is that 80% test? So we get to see, does this breakout hold? And if it does, we likely want to look to try to buy some calls on this dip down to 202 or 202.23 on IWM with stops below it, because that is the other side of a range. Without a range, we can't have a breakout or a breakdown. So when these breakouts come, they can be relatively explosive. So up here to this 212, if we can be trying to buy calls at 202, you know, and then looking back to recent highs back in 2022, if we can buy calls at 202, stops around, I mean, you could even take them all the way down to 200, and it's still going to be a 1 risk, 6 reward trade to run it all the way to that 212. That's how you want to trade these things. Trade at the extremities of them, because that's how you'll make money. The people buying calls for the breakout, smoked. The people buying calls for the breakout, smoked. The people buying calls for the breakout, smoked. Same as puts. The people shorting the lows, demolished again, absolutely demolished on the last one, you know? So you never want to be that person. So this is a very long time frame example. Now we're going to go to a slightly shorter time frame example. AMD on the daily. This was one that, you know, everybody has been trying to catch the AMD breakout for a month, if not more now. And, you know, it's just been pretty rife with failure, you know, because people were ignoring that we're in a range, and they were repeatedly buying calls at the top and buying puts at the bottom, thinking that they were fine, they were going to be the one to catch the breakout, you know. It was the same thing people try with Baba all the time, you know, Alibaba. They want to catch the breakout, they want to be the one that catches the breakout, but they lose 8 times before they get it on the 9th time, you know. And so AMD is a great one to talk about now, because we see what can happen with, you know, when we do finally get that strong range breakout. And so for me, this is how I had the range drawn on AMD. And how I did this was, you know, strong breakout, little bit of a pullback, and then same way. We got our push up here, and then we drew back down to kind of these lows. The reason that I didn't, and I typically do, include the wicks on these was just because I wanted this low of the first candle, because this was where that breakout came again. And then on this one, as I recall, back on this day, we like pushed up because we opened here. This was a big gap up. And so I actually I wanted my range around the gap level. So now we get a look at uh so now we get a look at this, and everybody gets to FOMO and say like, oh my god, I missed AMD. And it's like, well, you've been scorched for 3 weeks trying to trade it. There was nothing technical about this breakout, and it was 100% news backed. But this is one where we get a look at the daily time frame, and we really get to see the prime examples of, we knew this was our low. So when everybody was saying AMD is going back to 160 at the range low, we were the ones getting long, looking for the bounce. Yet again, pulls back down here, look to get long, look to get long. This one, you could have got long and you could have got stopped out on that gap down. No denying it. However, you were down $2 or so, $1.50 move down, followed by just epic gap up, On this other end, this one obviously offered a short, but was setting the, this was setting the range. So we didn't know really to be short here. We didn't know that AMD was going to drop 20 bucks off of there. However, these ones, to me, don't offer the best shorting opportunity, because we're a little too far away from the top of the range. We're $3-4 away from the top of the range. So it was a little early for the short on both of these. However, the one that actually really touches the top of the range provided an excellent short. I mean, provided a $10 move down, something like that. So really, really awesome one. And then the other thing that I want to point out, the same thing that we talked in the other or on the other chart, here's the middle of the range. And we know that's the no trade range, and of course you can take trades on this intraday. There's times, of course you can take some intraday trades on this, but when you're a big picture, like breakout trader kind of thing, you still don't want to be in this middle of the range. And we can see it again perfectly here. People tried to get long, maybe made money, ultimately got blown out. The people who waited for extremes made money. People who tried to swing on this smoked, and then maybe catch this move down, but just constant rejections, up, down, up, down, up, down. You don't want to be in here, because you'll end up losing money trading in the middle. So we can see here, all of the extremes trades paid. They all made us good money. And so those are the ones you want to trade. Well, then we have this really, interesting situation today where, let's see. Oh yeah. See, see, everybody's complaining about not catching AMD. No big deal. Who cares? So obviously on AMD, you really needed this range. And then in the end, and I drew my range like this, just in honesty, I didn't have this wick. However, it's 185. So today we pull up this chart. We had one more test right here where, yes, you could have shorted it for sure, and it's a range. So if it closes outside of the range, we stop out. In the end, your risk ultimately ended up being 50 cents of upside. And then if you didn't if you didn't stop out, well, then you were likely green here. And I have a pretty strict rule of, hey, if the market goes against you once, don't let it go against you twice. So you were likely green here. If not, you stopped out. And if you didn't stop out, now it's just your bad. So yes, this was one where, hey, the breakout, it ended up not holding. However, if you looked at it from the other way, quickly admitted you're wrong, quickly see us breaking over that previous wick, then perfectly fine entry here and amazing entry here. You'd be entering at 184.79, and your stop is going to be less than it's going to be what, 75 cents below you. That's it. So you're going to be risking 75 cents to get long here. So this is trading both sides of the range. Yes, the shorters here, you likely lost money. No big deal. I mean, it's what happens in all trading. Nothing is 100%, And so this is one where if you did short it, you likely lost a couple of bucks. And then as long as you didn't panic, as long as you didn't hold these things way too long, you didn't think it was going to start dumping back down, saw that the obvious risk reward trade not only offered an entry, I mean, technically offered an entry here, then offered another entry here, then offered a third entry here. Then if you were, even still in more of a chasing mood, here is your highs. It then proceeded to offer entries here. So anybody who's an AMD trader that says that they missed this trade today, you kind of just needed to open your eyes. There was entries all over the place to get long on AMD. So AMD is a great one where we get to see a month of consolidation. I don't know how long this is, but this is back to, January 23rd, something like that. An entire month of consolidation. And then finally, AMD puts in the $20 ripper. And so this is just wonderful, wonderful example of why we as traders should love ranges, because it offered us 4, 5, 6, 7. I mean, this one doesn't really count. We're going to remove that one. It offered us 6 very, very great, very, very low risk, high reward trades. Then finally, 1 stop out. So at that point, you would be, 6 for 7. And then 3 more really, really great trades on the confirmed breakout using the levels that we have, one of them identified as, I think, all-time high, and then the, tops of ranges. And then the only other level we needed today was where the one pullback came. So AMD, super easy trade. All you needed was your range. The second you were outside of your month-long consolidation, it was time to start looking long. And if you were short, don't get like down on yourself. That the very, very reasonable entry right here to short it. Like, that is a good trade that didn't work out. It's really just that simple. So that's AMD. Next one we're gonna do, Apple. Apple, a little bit, this chart's a little bit trickier to trade right now. However, we're gonna ignore, let's see, I should just let's clear this one. So this is Apple. Obviously there's a more major trend even up here. That one's not at play for us right now. Oh, I did see a question in the chat I wanted to answer. Is it possible to be a range inside of a range? Absolutely. And as we're getting into shorter time frames, we'll start to identify those as well. Oh, Eagle, great question. We'll go back to AMD just so I can show you. I don't know if you saw that. But if you shorted here, you either stop out here. You can always stop out, hard stop, on the break above this line, or when this one pulls back down here and buyers show back up on this candle, you stop out. So that's what I'm saying. If you were able to short right at the top of the range, your risk ended up being, 20 cents or whatever it was. But if you don't take this stop out, you don't take this stop out, you want to take this stop out. We just have too many candles at this point. That's the 3rd candle closing outside of this range. Maybe it rejects, but I always like to play it safe and just get out of there. Yeah, the pullback and bounce was pretty much biblical. Yeah, got an AMD 5 times today. It was like, I mean, just buy calls on like every red candle and it kind of worked. Oh, what's up? We got Ryan in here, always short. I'm sure he was short AMD today. Okay, so next one, Apple. Again, go to the daily time frame, and this is one that is a bit more interesting because we kind of have multiple ranges. So it makes it a little bit trickier to identify them. However, the main one that we have going on is right here, even a little lower than that, somewhere about right there. 180-ish is basically the bottom of the range, So we have a range, we have a trend down. So, everybody wants to be short, everybody, on Apple, but it's not the time. Again, when we're at bottom of ranges, we buy calls, and there's no denying that every single time Apple has touched 180, calls have made more money than people trying to short it, even on these little flushes down, every single 180 bounce that we have had has paid and paid. And there's the drop down into it. Pay as we get down there. The news one, pay, So you don't want to be the one shorting Apple at 180. You're gonna get blown out. Like for now you are. The other thing to take note of is, we're in a downtrend. So if you're longing these, you aren't looking for the breakout, as we said, we have this trend inside of our range, but you aren't looking for the breakout. You are looking for the technical bounce off 180, best case scenario up to that trend. Well, this is an interesting chart because this yellow one, I'm gonna remove the gray box. We're gonna draw it again in a slightly different manner in a second. Here is our trend. So we know we want to be long at the bottom of ranges, but we also want to assume trends don't break out. You assume the trend is not going to break until it breaks is the best thing to do. And so we can see buy 180, buy 180, buy calls close to 180, you make money. Short the trend, you make money. Short the trend, short the trend, short the trend over and over and over again. A trend can be a very crucial part of a range because it gives you a price target and it gives you a short entry within the range without having to get back to the top of it. So there's always going to be people chasing Apple up here, chasing Apple, chasing Apple. And then they get blown out, they get blown out, they get blown out. So we want to look for trades that are extremely low risk and potentially high reward. And so any of these trades that we see here, break the trend, retest it, short it, stops above. Break the trend, break the trend, retest it, stops above the trend. Targeting lows, always targeting lows. Works again and again. Down here, long 180, long 180, long 180. And then people have been asking me because I keep saying, please stop trying to short Apple at lows, and then everybody's mean to me about it. So here's what I really want people to be paying attention to. We have the gap here. So a lot, and I hope our gap guy isn't in here tonight. How I like to use gaps, because they are like anything else. I like to use gaps as more of a place to trade up to. You fill them, obviously. This one's full, but I still know that that level is likely going to give us, something. There's it's very, very likely going to react for us because we moved through it fast. We moved through it fast. We moved through it fast. And then we had a little bit of consolidation in the lower half of it. So I'm going to assume that this gap level, the start of it, is still going to behave well for us. So then over here, we have our real range. This is a failed breakout, and then again, another failed breakout. And this failed breakout set us a lower high. So that's when our trend turned down. That's that gap level. So to me, this is the range we care about on Apple. There's people trying to buy Apple 200s with time. Well, great. But why not get a reasonable strike and buy some, 185s if you're bullish on it and try to catch the move up, to the top of the range and end up a little bit in the money, Yeah, Josh, exactly. Oh, nice. I'm happy you wanted to hear Apple. Josh, exactly. They typically continue to work. If I could, God, there's another one. Maybe it was IWM. I think it was IWM. This old gap zone was ridiculously money. I know that this is a big range and, I was taking some higher risk. The shorts off of like anywhere in this gap, you can see they were just printing over and over and over again. While everybody was trying to catch the IWM breakout, I was shorting that thing around 195, 196 every time. Okay, but so here we go, back to Apple. Back to Apple. Well, now we have our range, we have our trend. we know that because, like everybody knows, big round numbers matter. Doesn't matter what chart you're on, what stock you're trading, things like that always matter. So we got 180. Not only does it matter now, it has mattered previously. This is a big level for us. So we have to look at this and and ask ourselves, which of the like where is the better risk reward here? And to me, and I'm hoping to everybody as we're talking more and more, it's calls. Like if we're coming down to 180, like I don't care if your feelings tell you that Apple's going to go down and it's going to break 180. Maybe it will. Um, but I'm going to trade the bounce until it doesn't. And so you might say, where is my stop on Apple? And it's this wick. There's no reason to stop out on calls. If you're buying calls at 180, there's no reason to stop out on calls until you are seeing some real selling below 179.26. So we can see here the risk is 70 cents of downside. So you're going to lose 2/3 of one delta on your contracts. Very, very low risk. Well, where is our target? It's trend. So if you bought 180 calls today, or calls at 180 today, your ultimate target was about 182. Well, if you bought them yesterday at 180, your ultimate target was around 183 because the trend is going down. Right here, if you bought calls here, your ultimate target was that 183.50 because the trend is going down. So as the market gets tight, consolidation gets tight, now our risk reward gets smaller. Still a great risk reward, as far as the trade goes. But this is where you want to be long. However, we are coming to the culmination. Over the next couple days, in my opinion, Apple will make the decision. Maybe it will break down. Maybe it will break out. You guys know that I love trading statistics. Here's where our low is set. First try, second try, third try, fourth try, past 180 is fifth time to try, is sixth time to try that holds, or do we break out and push up in the market? And then how do we trade from here? Well, you always want to look for any sort of recent high. So if we break out, you're obviously going to be targeting basically this green wick here as an ultimate. If you aren't trimming on a $4 Apple move on the way up, I don't know what to tell you. Then next one, any recent highs. So really, that's where you're targeting to. Happens to, no surprise, line up with the middle of the range where you don't really want to be in a trade. So piece of cake trade. Take the simple trade. Get your feelings out. Oh, I got a gut feeling Apple's going to lose 180. Well, yeah, gut feelings are a great way for you to lose your money. However, Apple breaks down, then great. Then we can, zoom out a little bit and we can start to look over here and say, oh yeah, where do we think Apple's going to go? We already know this 180 has been huge in the past, so it's strong, but where does Apple go from here? And we can start looking for downside. But for now, we care about this little box right here, this range. This is all that we care about, at least in my opinion, So really, really, Apple extremely tradable right now. Because that the contracts are cheap. Unfortunately, I hate the strikes. You got to get those 182.5s or go in the money 180s, but they're going to be a little bit more expensive, But very, very tradable, very, very nice moves out of it. Shorting, whether you're shorting at these highs, longing at these lows, you're making money. The people who are, the people trying to trade it around 181, they're having a much more difficult time and making a lot less money than the people that are just waiting. So that's what we wanted, that's what we always want to do. Can you briefly explain what a gap is? It's nothing. It is, you only see gaps on the day, you only see gaps on the daily time frame because they ignore after hours movement. The market didn't just dump and nobody was selling. Like here is the movement that happened in that Apple gap right here. However, when you zoom out to the daily time frame, it appears as a gap because the daily candles care about open to close only. They don't care what happens. So this candle closed at 192.50 and the next candle opened at 187.20. That's, that's what the market registers. So that's all a gap is. And then the theory of why you can get nice movement through them is because if we go back and we look at this is likely not the best example. So here's an Apple 4-hour candle, 12,552 volume. Well, this Apple 4-hour candle had 46,000 volume on it. So they move much easier. So the theory is when you get into a gap, you can move through it quickly because pretty, very low orders in the grand scheme of things were filled through there. So there won't be those resting orders still waiting there, which are what, cause rejections or bounces or whatever it is. Ooh, how do you trade at range and trend? I mean, I was sort of hoping nobody was going to ask that question. You wait. That's all you can do. You'll hear me preach it all the time of we react, don't predict. So ideal world, depending if you're a bull or a bear or whatever you are, if you're a bull on Apple, the ideal trade here is a breakout, a pullback to this trend and 180 on this side, then you hammer longs and look for that bounce. If you're a bear, you likely want to see us break down below here and then come back to this trend. Somewhere over here, this 179 area, and then traded the exact opposite. So it's going to be a breakout retest, breakdown retest, trend retest, whatever. Traded the opposite of your longs though. Your long at 180 stops below 179.26. Your short 179.26 long or stops above 180. So kind of the other way. Mike, not quite. I mean, this is about how to trade the consolidation. You want to trade at the extremes. You don't want to trade in the middle. And then of course you can, you can trade the breakouts and breakdowns as well, but it's best to just not go hunting for those. Yeah, I see that. The Apple volume was insane. 12. Oh, wow. Even more than I thought. 49, 54 million volume, huh? That's insane. That thing went from a low volume day to a high volume day in a hurry. Like look at the volume like chart, dude. You can't even see the other candles. Wow. When I saw it, I thought it was like 42 or something like that. That is, yep, that's insane. Insane volume. How do you find levels on things making all-time highs? So AMD is kind of one of those prime examples. This was a great one where I think this is all-time high. I guess I should look. I mean, that's got to be all-time high, right? I don't know. I just assumed it was. Yeah. So okay. So all-time high. So AMD, you have your all-time high set. At this point, this is really the only upside level you need. And then as far as finding, because we didn't do any level finding in here. If you want to find levels within the range, then great. You just look for points of rejections. Where did we reject a bunch? Or on the other side, where did we bounce a bunch? Then we know our range is down here. And that's how you really want to use, price targets trading through a range like that. Those are the places where you want to be trimming. You of course don't always know they're going to go, like you aren't always going to get a $4 move up on AMD or a $6 move up. But those are areas where if you're in, you want to be trimming. And then beyond that, it's going to be intraday stuff, kind of like we talked here, we had a pullback here. Well, this should be your target. If you're buying this pullback, the previous high should be your target. And so always look left on the chart. If you're curious what's going to happen as it's moving to the right, look to the left. And if we've rejected here, you likely want to be trimming here. And you can see that it was a point of pullback for us, offered yet another pullback to buy, of course, ultimately. But, you always want to look to the left. And you can do that, all day long. Like if you're buying, say you're lucky and you snipe some calls down here. Well, if you aren't trimming when you get up to here, which was the previous high, you're insane. And you can see the market gave it the breakout and then clobbered it, and then that level just ends up you always want to be looking for previous highs and lows. Like if you're short, you want to be looking for some previous lows to trim at. You're short up here, you know this is likely going to be your target. And look at where do we ultimately stop? Right there. So you want to use that intraday stuff when we're at these all-time highs. Otherwise, when levels are all built up, you can just trade, on dailies and stuff like that, like SPY. SPY always has levels around that you can trade between. How do you eliminate trading buys? Dude, Ryan, I loved you. Dude. So I told Ryan I told him to turn bullish, like, I don't know, somewhere back here, right around 4,000 ES. Where does that guy turn bullish? Right here on our pullback. And then even here, I think you were like buying calls in September too. That poor guy. He just couldn't, he's the bear of all bears. I respect it though. Somehow makes money. Oh, look, there's Zane. Apple. Apple high a day. One of my greatest call outs ever in OT. I called Apple to high a day right here. Right, Zane? Something is viewing. I like that. I don't know if that was a typo or if that was making fun of me when I did it. I forgot I like that one. Uh, wouldn't trim at the first resistance level where I took a leg down. I mean, are you kidding me, dude? If I was an AMD right here, I would be all out of the trade here. And then if I was an AMD right here, I would be all out of the trade here. Man, I'm a scalper. I want that. I wouldn't even hold that long. That's like $2, I mean, I would just be taking these quick pops over and over and over again. That's just me. Nice, Mike. I am just saving that DM. That one's gonna come in handy. Yeah, Josh, there you go. I mean, yeah, and that's me. I mean, I'm an extremely conservative trader. I mean, in all honesty, if I bought this pullback, my first trim would be here. But that's an 80-cent move. Not everybody wants that. Wow. Dude, I love you, bud. You are hilarious, dude. You're just the best. I love that you can laugh about it though. And you don't ever get mad when I just pick on you take it real good. Okay, so those are the ones I wanted to cover. Does anybody else have any charts, any trades, anything you want to look at? That we can talk about trades that you're in, trades that you're considering. We got 10 more minutes. Maybe, wondering if we're trading a range, or like what are we doing? A SPY. I mean, I guess we should talk about SPY, obviously. Yep, SPY. Okay. So obviously, pretty we have all-time high here, and we have new lows set here. So at this point, when it's like going back to 440, I love you, bud. I hope we see 500. I'm still sticking by that thesis. We see it sometime sooner than later. So at this point, small range, 4 candles. We have a high and we have lows that we've bounced off. So for me at this point, I'm feeling like I did, but but it was just that one, like I'm feeling like I missed the short. I'm feeling like I missed the short entry on it. However, this was just a wick. Like, I mean, look at the 1 minute. Pushed up, dumped it. So I'm sort of feeling like I missed the short entry because I would have liked the short entry there, but I wouldn't like it that late in the day for a swing. But for me, I'm watching this range now. I mean, it's the simplest thing for me to do. Same thing as anything else. We're at the highs up here. I'm short. We're at the lows down here. I'm long, and I'm not doing a whole lot of anything besides scalping in the middle. Just because that's pretty easy. And so, that's how I trade. Is it for everybody? No, but like I like simple, stress-free trades. I know that if we get up here to this 509.50, 510 area, people are going to be screaming, buy calls, all-time high, buy calls, all-time high. We're going to bust it, new all-time high coming. And maybe we do, but that's just not how I trade personally. So I'll likely be looking short up here at all-time high. I mean, a new all-time high test, like, let's be real here, that's like 95% of the time. You at the very least get a short scalp off of it. Just like yearly lows, you can almost always catch a scalp long at 52-week lows. But for me, no interest swinging here. When we look at a lot of these big names, Apple in a range, no surprise. Microsoft in a range, no surprise there. Google, even trending down, but you can make an argument for a nice like $20, $15 range there. Tesla, definitely in a range. Like, I mean, terrible to trade forever, trying to break this 200 finally, but like terrible to trade. So when I see all of that, I see SPY kind of in a range. I'm not looking for breakout trades. I'm looking for super simple, easy scalps intraday. That's my thing. I mean, obviously standout today, AMD, epic breakout, but took a long time to come to fruition. So for me, trading SPY going into tomorrow, I can basically tell you that like these are the levels I will be likely trading around, all of them, up or down. I don't care. If we break all-time highs, then for the short area targets, oops, no, we want this one. For any shorter, closer targets, it's going to be these fibs right here. Oops, this is going to be ugly. Give me 1 second. It's going to be some of these fib levels here. This is what I'll be looking for upside. If we break out, that's how I'll do it myself. But otherwise, it's going to be these levels all within this range. And so that's how I'll be trading it personally. I mean, considering 820 NVIDIA leaps for next month, well, just to be technically speaking, that a 1 month contract isn't a leap. But if you want to dump that much money into a contract on speculation, you can. I don't think it's the best entry here, but it's Nvidia. Like I'm in no way no way am I telling you to like short Nvidia, but like you want to be buying calls like back here. You don't want to be buying calls $3 below eight. I guess right, this is $9. Nine. You still don't really want to be buying calls for more than a scalp. $9 below 800. If you're looking for a swing, you want to be buying at these lows and then stopping on a couple few buck drop. You don't want to buy leaps here, ride a $12, $13 down move and get smoked. That's just not the move. I'm loving IWM. Mike, I don't know which Mike that is. But yeah, Mike, we talked about that one early. I mean, it's working on the weekly breakout. Obviously, the main things we need to watch are the 2 weeks where we attempted it and we're ultimately smacked down. These are going to be some important levels. So if you are getting long on the pullback to the top of this range, this should be first target. Then you start talking about these previous highs over here and ultimately 212. But you do want to be conscious of where we got just absolutely smacked down. Dude, you're probably right. The day the black swan comes, you will be full ported long. I mean, just for me, I wouldn't be swinging Nvidia like that. Just like Theta is so aggressive on those things. Like it's tricky. It's tricky. If Tesla holds 200 tomorrow, you're gonna long it. I mean, yeah, probably you and everybody else. I mean, I don't know. This company's just not doing good. So I want this. I want Tesla back down to 175. I want that trim break. I want to short it. Oh, you're talking June of like 2020. Oh, you're talking like 6 months, 4 months, whenever it is. I don't even know what it is. But yeah, 4 months, that's a little bit better. But uh that's okay. That's okay. I mean, I think I think you can get a pretty nice bounce off 200 if I'm being real. And those Nvidias, yeah, you could swing. I mean, if you got the money to swing like a $5,000 contract or whatever those things cost, I don't know how much they are, but there we go, Ryan. Love the honesty. I mean, I gotta be honest, I was pretty like bearish biased into the morning. Like I said, on my SPY trades this morning, I was pretty bearish biased going into the day. Um, Caught some nice shorts. And then about the time the market decided to like not be bearish was when I quit trading. I don't know. I just wasn't feeling it. We're pushing now, huh? I wonder what's moving us up in these after eyes. They're running it. Wow, look at them. June 21st. I mean, that could do it. I'm sure they're expensive. What do I think of snow? Ah, I don't know. That's a really good question. I mean, I'm not knowledgeable enough on the company. On the technical aspect, somebody asked me that it was the truly a no-brainer dip buy right here, strictly for a technical bounce, nothing else. This just offered great risk reward if you were able to smack that thing, early in the day. Like look at this retest of that low going into the day. And you could have had the stop under like 180, you know? However, big picture, their guidance was weak, but not horrible. But I don't know why they dropped 25% or whatever they did. I don't remember. I don't know what it ended up being top to bottom on that thing. But 21%, I don't see that being justified. I kind of think it was just an I think it was just an overreaction of that CEO leaving or going to the board or whatever. Ryan Long and IWM. But dude, it is a two-year long breakout in the making. This thing's been trying. We'll see what happens, but I mean, I'm right there with you. Would I recommend to scout the same day expirations? No, I mean I can't recommend that. It's just I like it, and a lot of us like it, but it's really dangerous. It can really go against you, and if you aren't like you need to be able to stop out. That is the most important part. If you are going to trade same days, you need to not you need to never waver from your plan. If you aren't stopping out, you can lose a lot really quickly. And you don't want to do that, but if you really stick to it, then uh uh you can scalp them, for relatively low risk, position size accordingly. Ooh, best stock ever, T. Let's talk about it. So yesterday, gone into close, about right here, Mr. Bear Ryan that we got in here was alerting some 17 calls on T. So I hit those things at $9, then set the sell at 15. It's a ripper. Somebody bought him. He knows. Ryan knows. That one was a pair. Oh, look at that selling to close that. I hadn't even seen that, poor thing. But T, still, we've been talking about this, God, going on weeks now, ever since they got again bad news. I don't even remember what this one was at this point. Oh, like the whole line shut, everything shut down. This 1710 tricky. It has been a super easy short thus far. 1655 is the buy zone. So I know I got a couple levels in between there, but really I want to be short up here at 1710. Had I been paying attention, I already would be. And then buying those dips at 1655. Unfortunately, I did not, and 1K did not. Yeah, I like that, man. 17.5 is a walk away. So stop gap would help. I'm not sure. I think you need to retype that one. I don't know what you mean. Yeah, I know Snow is a really good company. I know that it's just that CEO, and he's not even leaving. He's staying on the board. So, yeah. Let's see. Mara Longs. Hope Ty's not in here. Touchy subject. Mara Longs. So, I don't know anything about crypto, so anything I say could be wrong for sure. So don't take my advice on it, Always listen to Grizzly. Technically speaking, it's pretty much in dip buy zone down here. This 25 all the way down to 23.75 area. Nice place to be trying to buy the dip on it. But I do think that we are going to start to see a pretty dramatic separation of miners' value versus Bitcoin's value, because big money, if they're smart, which they are, will go to the ETFs. There's no reason to have exposure to miners that can have issues when you can just have direct exposure to Bitcoin. I mean, there will be times and places that they want exposure to a miner if they're doing big things or whatever. But for the most part, I think big money just goes to the ETFs. I don't know why they wouldn't. But all the way down to this 24 area seems like a pretty good place to be trying to buy some dips on it. But this shit's so wild. You have no idea what, pardon my language. It's so wild. You have no idea what it's going to do. Neo, what's that thing up to? Roasted and toasted still. Love to see it. Nia's like the OG of the shit stocks. Well, I mean, pretty easy buy all the way down to about 530, obviously, stops below it. And pretty easy short anytime it gets up there to around 6, if you ask me. Oh, stop. Oh, stopgap Biden said, oh yeah, on the well, yeah, that's what they are. That's what all of these, funding bills and stuff are. They're all short term. That's why this comes up like every few months and everybody freaks out and both sides fight and they say we're shutting down the government and then they don't shut down the government. And so it's yeah, this is pretty par for the course so far. I'm almost to the point of just ignoring those. Oh, the Senate passed it. Great news. Um, yeah, Mike, I've done all my lectures are on proper risk management. Stock of the week, PLTR, huh? Man, I'm a little bummed because I did miss this trade because I wanted to get long down here, but I didn't like this 24.15 level. Then it broke out. I waited for the pullback and it missed me by 10 cents, and so I didn't take it, and then it gave the nice move. However, now at this point, like uh in my opinion, and I'm not saying I hope, God, I hope nobody, I'm sure MMA's in it, but that shit don't matter. But I hope there's no alerts on this. You're crazy to still be long here on some WSB rumor that they're gonna get put in the S&P 500. Like, people need to learn how to use Google because Karp, the psycho owner of PLTR, he he said that they were eligible for S&P inclusion 4 months ago after the November earnings. So be careful getting your WSB information, spreading rumors that PLTR is going to get S&P inclusion, because the last time that they were saying that, it was back here. And we know how that ended once they found out the PLTR people are liars. But you're pretty crazy to be long still, like with this above us. It's not where I would want to be long. I would want to see a break of that. I actually traded before this range started. I tried to trade the break of this, and I bought like basically the top. Took some strategic trading to get out of that one, I'll tell you what. Oh, long positions for tomorrow. Who knows? I gotta see how the market opens. No guessing for me. Oh man, we're a little late. I see people trickling out. Thank you everybody for coming. Really appreciate y'all. Um, Thanks for being here, taking time out of your night, talking ranges. I love me some range trading. So hopefully this was informative. Like I said, keep it simple. Ranges give you a very cut and dry method to trade. So just slap those boxes on the chart, look for some recent highs and lows, and trade them. Yeah, thank you everybody. Thank you so much for being here. Hope you all enjoyed it. Oh, nice. You hit a banger on the Neo. Dude, as I recall, Shark gave like a multi-thousand percenter in here. Um, and that did real good. Puts will pay tomorrow, I promise. Yeah, thank you everybody. Thank you all for being here, and thanks for the participation. I love when you guys all get talking. We had a good group of you chatting in here tonight. That always makes these lectures really good. Yeah, T to 1,000. Yep. Okay. Thank you, everybody. We will call it a night here. I appreciate y'all, and we'll see you tomorrow. Trade safe on Friday. Have a good one.